Well, this is David Friedman and my co-host Dave Burkus on TCA Crossroads, where entrepreneurs and investors connect. How are you, Dave?
I'm doing fine. I'm just remembering Red Adair's statement about good, fast, or cheap, pick any two. Well, we are cheap because we're free. We're fast because we get it out there pretty good. And I don't know if we're good or not. We'll let our audience decide that. But we have to pick any two. Let's leave good off the table and we're fast and cheap. How's that?
I think that's great. By the way, it was funny you should mention that because I have a client that has an AI system to find gas and oil patches, pools. And I said, you remind me of Red Adair. And he said, who's that? And I said, if you're going to talk to these oil men, you have to know Red Adair and watch the movie Hellfighters with John Wayne. So,
okay, we have a great guest today, David, and I'm going to let you introduce him and bring him on the stage.
All right. And kind of interesting, Mike Eckert is chairman of Gulf South Angels, and he kind of looks like Red Adair in many ways. John Wayne, stature, poised. How are you, Mike?
I put out many fires today, Dave.
Of various types.
Very familiar with Red Adair. Yeah.
Yeah, start off with telling us about you and how you founded Gulf South Angels. Then we'll get into the discussion on where you guys fit into the ecosystem.
Sure. It's not a particularly glamorous story, but I'm a former corporate exec and have been a limited partner in venture capital funds and an angel investor since the late 1990s. And this is the fourth angel group I've led. I had one in Atlanta and then one in Telluride, Colorado, where I lived in between my companies. I built a house out there. I had a national group. And then about 13 years ago, my wife and I moved to New Orleans for grandkid purposes. And I found that there was entrepreneurial activity here, but there was no organized early stage capital. And at that time, I was primarily investing and sitting on boards and an adjunct at universities. And I decided to start what was known as the NOLA Angel Network. And as our aegis then was to focus on entrepreneurs in New Orleans and Southeast Louisiana. We did that in 2014. And subsequent to that, we've grown now into a group of 170 members in 18 states. And as you know, we're one of the more active groups in the country. Year to date, we've invested about, $6.7 million in 17 companies. And we're very active. We're sector agnostic. Our members, we are a network with some sidecar funds. Our members vote with their checkbooks, and they don't like pre-seed deals unless they're healthcare deals at some stage of the FDA approval process. So our sweet spot are Series Seed and Series A. And because of the size of the checks that we've written in some deals, we have relationships with VCs. And so we have access to some B and C rounds, which have promulgated well, as we've had some very attractive exits from these.
What kind of exits have you had? For example, has it been 10x, 20x, 1000x? Just thinking out of the box here.
Most of our exits have not been over 10x, and I'd like to get into that at some point in this discussion. But This year we had an IPO with a company called Voyager Technologies in the space economy that came through one of our VCs, and we have another one lined up that might occur before the end of the year if they can get it in.
And what kind of multiple on those?
Oh, those will be in high teens. Yeah.
Okay.
Well, that's great.
Yeah.
Now, do you also, in your organization of 170 plus members, have a significant number of doctors, right? You have about 40 doctors or something like that?
It's more like 30, but yes, we've just been able to attract doctors. And what I found is that the primary driver of our membership, beyond our expanding our brand from the NOLA Angel Network to the Gulf South Angel Network, which in turn brought members from throughout the Gulf South regions,
Mhm.
Mhm.
Our primary driver of membership is our members, and they're enjoying what I think is a quality experience in being in our group, and they invite others. So, as you know, David, we look at a lot of healthcare deals, and as the healthcare deals come in, I collectively refer to that group of doctors as our doctors panel, and I have them review healthcare deals before we even bring them in our deal process, or perhaps put another way, they're the first step. And many of our doctors' practices will align with the particular opportunity we're looking at, or they have colleagues that they'll send it to. And that really keeps us out of trouble because, quite frankly, they kill about 90% of the
Yes.
deals
Oh,
that
and
come
that
in.
goes through him, no
And
matter
that
what.
really saves us some money and from making mistakes.
Now
So
you
a couple
participate. Go ahead, Dave. I'll come after you.
of questions really fast. Number one, did you make the top 10 angel groups in the list from Angel Capital Association this year?
No, I think we're 14th in the.
And you're coming up.
Yeah. Yeah.
And the next thing is, are you meeting virtually? Because you have a wide geographic area to cover.
Yeah. Interestingly, Dave, we became virtual before virtual was cool, and before COVID hit. And
Yeah.
as our membership rapidly expanded from the Gulf South region into these other states, we necessarily started using technology to have our meetings and our screening sessions and the like.
Yeah.
And so, yes, we've been virtual for years. And our meetings are it's kind of a New Orleanian thing, but our meetings are hybrid because New Orleans people like to get together and have a beverage. So our monthly meetings are held in New Orleans, and for those members in this area, they come together, and then everybody else is online. Although in certain of our pockets, some of our members do get together and participate virtually while they're together.
I like that.
Yeah, and we were worried, candidly, if about the quality of the experience for our investors, but we haven't had any problems with that.
Yeah. So let me go back for a second about the doctors. Now I know you and I participate, Mike, in Medical Monday, and you also became part of our larger TCA Venture Group Strategic Affiliate Program.
Right.
So are you also using these relationships and the expansiveness of the syndication quote ecosystem to broaden out the deal flow for you?
Absolutely. And I think an evolution, a logical evolution of our group was forming our relationship with ASN.
Mm-hmm.
And I would talk about TCA in a minute. And then ASN, through the TCA family of syndication dates, like Medical Mondays, Tech Tuesdays, and Trending Thursdays, we participate in all of those because our problem, relative to why we grew, was deal flow. There wasn't, I'm not even going to say significant, there wasn't a goodly amount of quality or quantity deal flow in our region. And if you step back and think about the region from Houston to Atlanta, there just isn't much there. And as we grew, we had all this capital, all these members, but we couldn't deploy it regionally or locally. And so we evolved nationally. And then when we got involved in ASN, our world changed. And we were seeing such quality opportunities, and we continue to do so. And Dave Burkus, you may not know this, but I've been a big fan of TCA for 20 years. And when I sat on the ACA board, one of your colleagues, you may remember him, Ralph Mayer.
Oh, of course.
Ralph, yeah, of course.
Well, I was on the ACA board with Ralph, and as we got to know each other, and he talked about what TCA did, and then others like Steve Flame, and I can't remember, John is, I think, on it now or was on it. But the things that TCA does and the enlightened approach you're taking to this asset class is a level of its own.
Wow.
And we've emulated, and I mean, I've studied you, and I mean, our sidecar funds, we somewhat model after you. I've known your people. So becoming a strategic affiliate of TCA is just fabulous for our group. And we've already benefited from it. And David, we're seeing relationships built, co-due diligence opportunities, education sessions, and the value is extraordinary.
No, good. Do you see the same thing happening with other angel groups as syndication, co-due diligence, or is it just the start of it? Is it, or is this becoming part and parcel of the way things are going to go long term?
Syndication is a significant part of the angel landscape now.
Okay.
Because of the size of the asks of many of the
Yes.
deals today. And most angel groups, I'm going to guess on average, put in 150,000, I don't know, maybe 200, something like that, which is sometimes a fraction of an ask. So syndication necessarily becomes part of the landscape. And again, we are a net importer of deal flow. About 90% of the deals that we do are led by somebody else.
Mm-hmm. By the way, you're wearing the hat, but hats off to Richard Sudeck for having started that. He was the first who began to see that very problem. He put together ASN, ran it for years. And yeah, you're a beneficiary, and the way you're describing the experience really is a happy thing for me to hear.
And the relationships we've built with other groups, as you guys well know, a basis of successful syndication is the relationship of the groups and the trust built.
Right.
Yeah.
And
Trust.
and the people we've met through TCA's syndication forums, I think with few exceptions, are just top quality people.
Wow.
Yeah.
We should be.
And I'm serious. I know you guys should pay me for saying this, but I'm very serious here.
Okay. Well, we'll take it.
So let me change the focus just a little. Let's talk more about things that Gulf South looks at when they look at an entrepreneur. What advice do you have? What do you suggest to entrepreneurs as they apply to Gulf South?
The things that we'd like them to speak to are, one, their product market fit or service market fit, for sure. We'd like them to have an understanding of their competitive sets. Again, we're looking at Series Seed and Series A, so we're a little upstream than the basic pre-seed crowd. We'd like them to have, or their advisors or boards, some sense of market terms and realistic terms.
Yes.
For a healthcare deal, I mean, you know this, David, from Medical Mondays. We're interested in where they're at in the FDA process, where they're at in terms of any moats or intellectual property or competitive advantages they can achieve. So we like to have those conversations with them in advance to perhaps make their effort with us more efficient. Mm-hmm. And certainly for us.
How do you screen deals? Do you have a screening committee or a pre-screening committee?
Yeah, we do, Dave. We receive about 40 opportunities a month. Mm-hmm. And we pre-screen these. That doctor's panel was one of the ways we pre-screen, but we have others. And what we do is we have a monthly screening session where we screen 4 companies. As we are all volunteers here, and we have 2 part-time and 1099s to keep us out of trouble, so we're all trying to be as efficient as possible. We have 4 companies, and the companies present, and it's a classic, 10 or 15 minute pitch, 10 or 15 minute Q&A, and then our screening session, which has a team which has about 25 people on it.
Huh.
I like to have our members exposed early to deals, and I like to have a broad look at deals and not have, the type A personality control some of that stuff.
You bet.
And so what we do is we have a poll, an online poll afterward, similar to what Laura does, but simpler. And it's more of a thumbs up, thumbs down. Should we move the company forward in the process or not? And so we probably, between pre-screening and screening, we probably are down to 15% of those that originally came to us.
That's a lot, actually.
Yeah, I was going to ask if you have stats going the next stage. What percentage are funded of those that are funded?
We fund 7% of the deals that come to us.
There you are.
Yeah.
Mm-hmm.
Wow.
And some of the groups are down to 2.5%. Some of them are up to 10%. And so what I see is that kind of a range. And you're right in the middle. You're right where you belong.
Last year, we were 6%.
Okay.
Yeah. If we have a TCA, I think the deal percent is probably around the 2%, maybe 3%.
2.5. That's right.
Yeah, we see a lot more deals.
How many deals do you get in the?
I
think you have to start with that number.
We'll see collectively across the entire network, the member groups versus the affiliate groups. We'll see well into the 1,500 deals.
Yeah.
A year.
See, so if you invest in 25 deals a year, it's a very low fraction. I mean, we're closing our 17th deal on Monday, and that's a lot of deals for an angel group.
Yes, it is.
But it is. And what's your average amount of money? And are you fund first? You said you had funds, so do you?
We're not fund first. The way when we put our sidecar funds together about 8 years ago, we benchmarked several groups. Certainly with TCA, we did. We took some of your model, but what we do is we have a model where if 5 of our members in aggregate invest $100,000 in a deal, so it starts with the network, that triggers an automatic investment from the fund.
Oh, I see.
I've seen those.
3 or 4% of the assets in the fund in the initial round, and then if there's a follow-on round, we have an investment committee for the funds, and that committee will decide if the fund should participate and how much. And no fund can invest more than 10% of its assets in any one company.
Yeah, we're TCA. We flipped it around a little. We're fund first.
Yeah, right. I understand how yours work. Yeah, right.
But we began as just what you are.
Is that right?
ACE funds were sidecar funds.
So let me ask you: when you bring on a new member, I'm going to flip it over to the membership now. Do you have ways that you mentor the newer members coming in, and are the members that are coming in younger, or are they just different? Maybe you bring in more doctors. I'm just trying to get a perspective on not only how you're attracting the members, but also are you seeing a younger generation coming in, and do they have different expectations than some of us older folk?
You just asked 6 questions, so let me see if I can.
You did.
I do that. I have that problem.
That's your due diligence coming out. I'm starting to feel like an entrepreneur here.
Sorry about that.
I'm joking. So as I mentioned, our members are our primary source of membership. And of the new members we have this year, it's a range. We have many in their 30s. We have some retired doctors. We have some retired corporate execs. We have some existing professional people. And we have some entrepreneurs who had early exits and did well.
Okay.
And so they comprise our base, and then they in turn beget themselves with us. So we're seeing growth in those different demographics. And we have a group of very highly charged women in our organization who have a committee to attract women into our group as well, and they're doing a good job.
Yeah. How many, of the 170 people, how many women do you have as investors?
I'm gonna guess about 25.
That's pretty good.
That's a pretty good number.
Yeah, and we'd like to do much better though. I mean, we're just pushing on it. Once we get a member, we have a kind of an informal orientation where we explain to them the process, what our deal process, our meeting process, administrative processes, and we try to engage them as best we can. And what I found over the years in leading these angel groups is a key facet to successful sustainability is engaging the members. Mm-hmm. And many, as we all know, some simply can't. Their jobs won't let them. They get home at night, and the kids and the family are there. But there are different ways to engage members, and engagement in a group like ours promotes sustainability. And so we will do all we can to engage people. That's why we have a 25-person screening team. Our due diligence teams usually have like 15 people on them. And we have a membership committee and a sponsorship committee and education committee. We're just trying to, and you guys do all of that. We just try to keep them active and involved.
Are these mandatory?
No, you can't make it mandatory because some of their lifestyles just don't allow it.
Got it.
But you just hit the key. If they're not involved, they drift away.
Yeah. And obviously, liquidity events help too.
Yeah, by that part. So let me try. I mean, we're going to run out of time, but I wanted you to provide your top takeaways for entrepreneurs and/or your top takeaways for investors as you see it, over the from this year on, and what you see in the future. So you can just take it away, and this will be the your giveaway and benefits to all the people listening in.
Nice.
I think that, first of all, that deal flow isn't going away. I think syndication is an ever-increasing part of the investment scheme, which allows angel groups to see more deals and ideally better deals, and in turn select better deals and hopefully have better outcomes. So I sense that for entrepreneurs, I think they're dealing with cycles, and who knows what's happening, what will happen in this economic cycle we're in. I'm not sure if you guys are aware of it. We're seeing something in Louisiana that is pretty exciting for the local ecosystem with Biden's Inflation Recovery Act, which may or may not have addressed inflation. There were capital that was promulgated down into every state that had conditions, really, the SSBCI money. So you guys are aware of that. Mm-hmm. Well, in Louisiana, in each state could interpret it differently. In Louisiana, what they did was, what the state government did was create a fund that matched one if they started a fund up to $5 million. So if we put together $5 million, the state of Louisiana would match it. And the conditions were that we would need to invest in classic early stage startups.
Okay.
And so we have a number of funds that heretofore didn't exist in Louisiana that are getting these really early entrepreneurs, high risk stuff funded. And we are thrilled. My group is thrilled with that because we think that they're going to take some risk out of the system, and that some of those may percolate up, and we'll be there to fund them. And we spend a lot of time mentoring at the universities and the accelerators and incubators up and down the Gulf Coast, and through that we'll get to know them. And different of the states are moving that money around differently, but we think it's a great thing. So for entrepreneurs, if they're startup and very early, I would encourage them to look for that kind of capital because I think it's everywhere.
Very good. Just for a historic thought, Ohio was the first to do that.
Oh, is that
and
right?
Several other states followed, and it has been very profitable for Ohio, Oklahoma as well, and I can go on and on.
Oh, is that
It's
right?
those
Okay.
states without a lot of activity that created the activity with these injections of
Yeah.
cash.
Oh, was that John Houston and OTAF?
Yes, it was. He was the
Sure.
first to take advantage of it.
Right, right. Okay.
Okay, so that was a good summary, and I appreciate what you've been able to do in bringing together a diverse group, especially the physicians, a large number of females in a very wide area geographically. So you're to be commented or complimented, Mike, for having done that. And we appreciate you as a strategic affiliate member of the TCA Venture Group.
Well, thank you, Dave. We are thrilled to be part of the family.
Nice. David?
Yeah. And with that, I really appreciate your time. Thank you for sharing what Gulf South does, how it does it. I really like the mentorship, the activity, the engagement you're creating for your members to keep them engaged and sustained over the years. And I think your advice for entrepreneurs goes the same way. Find funds that have money so they can get funded, but also make sure there's mentorship by the angel group to try to help them succeed in their business. I think that's extremely good advice. And for all those viewers and listeners, check out Gulf South Angels, go on their website, contact Mike, and see if you can really just try to participate in one of their events. I'm sure that would be very useful for everybody. Mike, thanks again. I appreciate it. On behalf of Dave Burkus, Mike Eckert, and myself, everybody should have good investing, good fundraising, and best of luck for all of you. And with that, we'll catch up with you next time.